Please subscribe to the channel and press the bell icon to be notified of the latest videos. Sade here for kalkinemedia. Afterpay, Zip, Westpac, Suncorp. How have these four performed amid the BNPL boom? The Australian buy now, pay later market has witnessed exciting developments in the past few months. And since the onset of the coronavirus pandemic, many customers have shifted to online shopping. It has given a boost to the BNPL sector as the latter works as a microfinance alternative for customers. Meanwhile, earlier in July, PayPal took on Australia's homegrown BNPL firms with the nationwide launch of its fee-free instalment payments product. The new product will only appear as an option at checkouts for consumers who have a PayPal account in good standing and for eligible purchases valued between $30 and $1,500. Meanwhile, BNPL provider Affirm, which allows purchase payments in instalments, said that it had completed a deal with Amazon. And here is how these BNPL stocks performed during the earnings season. Afterpay Limited. US payments firm Square is in the process of buying Afterpay in a $39 billion transaction announced in August. In its full year results, the company reported underlying sales growth of 90% to reach 21.1 billion Australian dollars. Total income was up 78% to 924.7 million Australian dollars. Active customers increased 63% and the active merchants rose 77%. Meanwhile, Afterpay co-founder Anthony Eisen on Friday said that he and Nick Molnar are not going anywhere after the deal with Square reaches completion. The merger is expected to further boost the growth of both companies and provide more scale to take on the big banks, he added. Zipco Limited. In financial year 21, the BNPL major reported a revenue surge of 150% to 403.2 million Australian dollars. Cash earnings before interest, depreciation and amortisation, or EBITDA, loss stood at 22.9 million Australian dollars. And last year, the company reported a profit of 3.5 million Australian dollars. Zip also reported a rise of 176% total transaction volume to 5.8 billion Australian dollars. In financial year 21, Zip raised 676 million Australian dollars in capital. Westpac Banking Corporation. The Australian bank and financial services provider headquartered in Sydney reported its third quarter update in August. In its financial results, WBC said that it was considering returning excess capital to shareholders thanks to the post-pandemic rebound. However, it also highlighted that its lending margins were shrinking. And the company forecasts its net interest margin, or NIM, for the second half of 2021 to come in lower compared to the first half. WBC also expects expenditure to be on the higher side across the board in financial year 21. Westpac also has a number of planned divestments set for the second half of 2021, including sale of Westpac LMI, Westpac Pacific, motor vehicle finance and New Zealand life insurance. Suncorp Group Limited. In its full year results, the company unveiled strong profit growth and 250 million Australian dollars share buyback scheme. Suncorp announced a 4% fall in revenue to 14.2 billion Australian dollars. Cash earnings surged 42% to 1.1 billion Australian dollars, while net profit after tax, or NPAT, was up 13% on the prior corresponding period to 1 billion Australian dollars. And meanwhile, in its recent release, Suncorp said that it has opened its capital notes for offer to syndicate brokers and institutional investors. If you like this information, please like, share, comment on the video below, subscribe to the channel, press the bell icon and you'll be notified of our latest videos. But for more information and regular updates, head to the website kalkinemedia.com. Sade here for Kalkinemedia.